warm welcome to Personal Finance. I'm Gugulethu Cele. Retail distribution review. Well, that's a hot topic when it comes to the South African financial services industry, and in particular, how it impacts on the relationship between certified financial planning professionals and the relationship with their clients. Well, to get more details on this and understand just how broad this topic is and understand some of the implications that might be in the future, we caught up with the Liberty team to find out a little bit more about some of the key elements that are under discussion. We initially sat down with Johan Minnie, who's the Group Sales Executive for Sales, Distribution and Bancassurance at Liberty, to find out how this financial institution and its peers are responding to the changes.
Important is that RDR, this whole concept, didn't start yesterday. It really started in 2006, so it's 10 years in the making. The very first white paper was published back then. Many discussions have been had since then, many changes in the industry. We had the global financial crisis that happened in the meantime, and this is our third iteration of trying to attempt to introduce RDR into the South African landscape. I think very important, it is about the consumer. It is really trying to address a few things in the industry. The first thing is, if you buy something, do you actually know what you're buying? That's at the very heart of it. So somebody is coming to you and they're doing basically one of a couple of things. Firstly, they're giving you advice. Secondly, they're giving you a product. And thirdly, they're servicing your existing portfolio. And those three things are the three things that an advisor can charge for in the future. And they need to disclose in minute detail to the client, what are they going to provide you with? Is it going to be the initial advice? Is it going to be the product advice? Or is it going to be the ongoing advice? And you as a consumer need to know what you're in for, because you are now going to start to pay for that advice. Many people in the industry are saying that, but you're paying already. I think the fact of the matter is, if you ask 100 clients, 99 of them would say it's free. So they don't know that they're paying. And yes, there's commission disclosure, so they would know about the commission disclosure. Some of them won't know about the commission disclosure for various reasons. I also think that clients have selective amnesia at certain points. They forget what was said. And I think this process is trying to force everybody to focus on this very important thing in clients' lives, which is my future, my financial planning, my financial future.
Exactly. I'm glad that you bring that up, because it certainly speaks to the relationship that consumers will have to have with their financial advisors and financial services professionals. And a company like Liberty, well-respected multinational firm which has a wide variety of these advisors available, how are you going to now tackle the issue of having to reset perhaps the mind frame not only of the advisors that you have internally, but how they also adapt their relationship with consumers to ensure that there's trust that's been instilled there and not just an issue of pushing products?
That's very important. I think that we can go back 59 years. So Liberty was started in 1957 by Sir Donald Gordon, back then a young accountant, and he started the company with a question of, my father just retired, he was earning 200 Rand a month, now he's earning 28 Rand a month. How many other South Africans are in a similar position? That is not a good position. That is a consumer-centric question to ask, a very personal one. And he invented the retirement annuity, which was the start of Liberty, and eventually you have the big company that we know now. I always say, Liberty is not just our name, it is what we do. I think that we are very fortunate that Donald Gordon decided, and most probably for very good reasons, Liberty. It is liberating people, it's making them financially free as much as possible. I think that we're going back to those roots. So everything we're trying to do is to simplify things, is really to get to the consumer in a way that once they've engaged with us, we educate them, we help them, we understand their needs, their aspirations, their wants, their world, and then we help them choose.
And that goes back to the serving the basic needs of consumers.
Precisely.
In conclusion, though, Johan, if we do take a look forward at, I understand that the implementation of RDRs has been pushed back ever so slightly, but in the interim, what does this mean for a company like Liberty and how the landscape might change? You mentioned technology and the smartphone. Does this mean perhaps that robo-advice will become a theme that consumers will get used to, especially those who might seek to be Liberty clients in the future?
I think, again, at the very heart of it is really understanding our clients. And then using whatever means we have in order to get our solutions to those clients. In a sense that clients will look at it and say, this makes sense to me as a person. You know, we talk about segmentation, we talk about cohorts of people, but when we think of those words as people, as an individual, I don't want to be a cohort of people. I am Johan, I'm an individual. I have my own needs, I have my own family, I have my own house. My house looks different from yours, looks different from somebody else. Okay, the things that I do there are different from others, and it's those detailed things that we need to understand, that we want to understand, and then provide solutions that is custom made to you as an individual. That's a massive ask. It is the segment of one. It's a massive ask, but you can do that through technology. I think getting closer to your financial advisor, our financial advisor getting closer to our clients in the meantime is so important, because it is about you as a client at the end of the day. When people phone into our call center, they shouldn't have to quote their policy number, because I don't remember mine, you don't remember yours. I most probably have 15 or 14 of these things. I should have one reference number, the one that I know, okay, my ID number. Everybody knows their ID number. If you go onto the website, it needs to be a thumbprint, or whatever the case may be, something that's simple to use, easy to use. Again, it's a very aspirational mission that we're on, but we're very determined, like Sir Donald Gordon 59 years ago, to achieve that.
Well, that was my conversation with Johan Minnie of Liberty to get his understanding of RDR and what it means for the industry going forward. But what about your relationship between you as the consumer and your financial planner? Well, that's why I caught up with David Kop, who's a CFP professional and head of Advocacy and Consumer Affairs at FPI, to get his perspective to understand how the relationship between client and planner might change in the future once RDRs are implemented.
One of the big changes is they're starting to look at the activities that financial planners and advisors do. And one of the things that consumers don't understand, that in the process you are actually getting advice. You're not just buying a product. And the commission that gets paid for that product includes an advice fee and advice aspect. So a lot of discussions are taking place, now there's going to be fees charged for advice. They've always been there. There's just a highlight coming to it. And the advantage of that is we can now start having that advice conversation and start asking, what is the value of this advice that I'm actually getting and paying for?
You bring up the contentious issue, which is the fee payment model, because I don't think consumers have often paid consciously for financial advice. Should we as consumers be worried about how this will impact our pockets and access to efficient financial advice in the future?
So the interesting thing is there's lots of talk and there's lots of work being done at what business models, how advice can be delivered, how can we use technology to ensure that we can still deliver advice to consumers. So yes, consumers haven't been consciously paying for it, but they have been paying for it, and that's been included in the product fees and charges that you've been paid. So what we have seen in other jurisdictions, like the UK, is that ultimately the product fees that have been paid have been going down, whereas the advice fees has been going up. So the consumer is still paying the same that they've always been paid. We're just seeing the money being channeled into the different aspects where we think it should be going, which is into the advice component of it.
When it comes to the advice element as well as CFP professionals, they certainly serve a wide variety of clients, individuals who perhaps might be approaching retirement and up-and-coming millennials who still have years ahead of them before they conclude their relationship with their CFP. But how then does a CFP need to present themselves to these respective clients, because the regulatory landscape might impact on the clients very differently too?
So I don't think the various clients will be impacted that much on the regulatory advice. What we have seen and what research has shown is that the millennials are prepared to pay for advice. They're not scared about paying for advice. They understand and they realize it, and they're prepared to pay for it. So Yes, but how you engage and the mindset that you go into your clients with is going to be very different. It's no longer about a case of, is this somebody who I can sell a product to? Is this somebody who I can have a relationship with, who I can walk along the journey with them? So if I'm dealing with a 20-year-old, the idea is that I should be walking along with them and hopefully be advising them at 65 when they are retiring, and not just when they're 20 and then hoping that one day they'll be able to retire comfortably.
Exactly. On that note, though, how is the technology also expected to impact on the RDR changes and implementation, and obviously our relationship with advisors? Earlier on today, we heard about technology being used, robo-advice, perhaps new apps which allow you to actually access various financial tools differently in the future.
So most definitely, the traditional financial advice model has always been sitting across the table and face-to-face, which is time-consuming for people, both the advisor and the client, because somebody has to drive, somebody has to get in their car and arrive somewhere. So a lot more people are willing to deal electronically, use things like Skype, use apps to actually engage with their financial planner. Robo-advice is still, I think, in its infancy in a South African market and viewpoint. And again, we've got to look at what is actually robo-advice. Is it really something that's giving advice, or is it an automated application form? And that kind of demarcation still needs to happen and look at it. So I think that's a new challenge for the regulators to look at it too, to say, how do we actually regulate and put standards in place for the robo-advice? Because one of the principles that they're looking at in RDR is, regardless of how advice is delivered, the standards should be exactly the same. So whether it's a direct to the product supplier, whether it's via a technological platform or face-to-face, the standards of that advice should be the same.
David, as we wrap things up though, and coming back to the consumer and putting the power back in their hands, we're talking about costs, we're talking about our relationship with our financial advisors and financial planning professionals. Number one, when it comes to RDRs, what kind of cost structure are we looking at for consumers to be paying a fee to the professionals? And more importantly, what are the key and critical questions that one needs to ask their financial planner or advisor to ensure that the relationship is still suitable for the long term?
So cost is always an indication of value that comes to it. So it's very difficult to say that you should be paying a financial advisor 500 Rand an hour, okay? Because what is the service that you are getting for that? So the big question that you need to understand is, not only what am I getting now as an upfront advice, but what is our relationship going to look like going forward? How often are we going to meet? What sort of feedback am I going to get from you? And look at it from that viewpoint, that we're entering into a relationship, something that is going to last hopefully a very long time.
Well, that brings us to the end of this evening's show, bringing you highlights of our conversation regarding retail distribution review, how all of these elements impact the financial planning profession, and of course, you and I as consumers making use of these services. But do be sure to share your insight with us on social media platforms at CNBC Africa using the hashtag Finance410, and give us your view of your relationship with your financial planner and even with financial planning institutions. But for myself, Gugulethu, Cele, and the team, it's been fantastic being with you. Have a wonderful evening.